In the equity quadrant, I can now confidently say that the March S&P finished at a new all-time high, now up 4 of the last 5 sessions. When you look at the high, and there's still a little bit of trading time left, we're up above 5,020.25 for a high, which was up almost 95 basis points. So right around just short of 1% higher. And on the low, not much, down 10 basis points, 49.70, when you had a settlement yesterday of 49.74.75. So pretty much a straight up day, and we're going to end up finishing on the highs today. We're now approaching being 5% higher than the previous all-time high close in December of 2021. Now, Fed speak has been part of the reason. Obviously, the recent rally has been on the Fed pivot, and the Fed speak so far has been sufficiently mixed so as to not disturb the rally. Neil Kashkari, who's the president of the Minneapolis Fed, thinks that 2 to 3 cuts may be appropriate, while Fed president from Boston, Susan Collins, wants to see more evidence of inflation slowing before she comments on where rates should be. Adriana Kugler, who is a Fed governor, thinks the risks are balanced and it may be appropriate to reduce the target Fed funds rate if employment suffers, which we may see, we may not. We've got jobless claims tomorrow. So all in all, it's been balanced and has not really erased the idea that the Fed has pivoted. And so equities have benefited from that. Also, U.S. yields were slightly higher, but they behaved in an orderly fashion. It didn't cause much drag on stocks at all. We had the largest 10-year auction today in history, 2.56 bid to cover, which is pretty good. 87% being sold to indirects and directly to investors, leaving dealers with only 13% of that massive number of 10 years to get rid of, and that's the lowest level since August. So that kept rate volatility, interest rate volatility down, which allowed the S&P to charge higher.